Okay. I'd like to convene the meeting of the Arizona Board of Regents Finance, Capital, and Resource Committee. It's now called to order, and we are in public session. I will ask the staff to confirm that we have a quorum.
Yes, we do.
Thank you very much. Our agenda today includes a tuition fee, housing, and meal plan rates discussion, the annual sunset review of fees, a presentation on the Colorado University system, the annual review of public safety personnel retirement systems assets and liabilities, and proposed policy revisions. Please remember that only members of the committee, Fred, can provide a second to a motion and can vote on a motion. And please remember to speak clearly and into the microphone. Fred. Our first order of business is to approve the minutes from our prior meeting. Are there any questions or comments related to the minutes? I move the committee approve the public and executive session minutes from the January 25th, 2023 Finance, Capital, and Resources Committee meeting. Is there a second?
Second.
All in favor?
Aye.
Opposed? Motion passes. Item number 2 will allow for discussion of base tuition, mandatory fees, differential tuition, program fees, class fees, and other fees, residence housing plans, and meal plans for the 2023-24 academic year. This item will also allow for a discussion of the maximum growth rates for the 24-25 and for 24-25, and through 2028 and 29 academic years. So it's multiple years there. We will ask each university to present their plans, but first we will start with an overview from ABOR. Brad?
Thank you, Chair Pacheco, Regents. Good afternoon. As soon as we got some slides going, we will talk briefly about the tuition and fee processes that we have in place, and then walk through each of the university's presentations regarding the specifics of their proposals. So as a reminder, at the February 2023 board meeting, so the last meeting, the Board of Regents approved changes to the tuition and fee policies that would evolve how the regents would hear and approve tuition and fee setting for into the future. Traditionally, the board reviews individual fees at a detailed level, as well as individual different types of tuition across each of the universities, and approves those discretely each year. Moving forward, the board is going to be adopting growth rate plans for those tuition and fees that will then broadly guide the universities in setting tuition and fees each year within each rolling 4-year period of a 6-year window. So as we move into that cycle, right now during this meeting today and the April board meeting cycle, the board is going to be doing 2 things. First of all, the board is going to be approving the tuition fees, housing, and dining rates for the 23-24 academic year, as going along with the policies that have been in place for some time. Additionally, we're going to approve growth rates for tuition fees, dining, and housing that will apply for the 24-25 academic year through the 28-29 academic year, which will then be revisited in a few years to extend those rates. As we can see here, as we move into next fall or next December, the universities will then announce the 24-25 tuition and fees within that structure that the board approves in April. That will repeat in 24, that will repeat in 25, until we get to the fall of 2026, where the board will again revisit the multi-year rates, adding 4 more years to the future growth rate window, as well as the universities announcing their tuition and fees for the following year. So that's the cadence that we're moving into through this first approval cycle in order to transition into this new structure. Now that said, as we are talking about these different proposals, we have really 2 pieces of what you're going to hear today. The first piece is the 23-24 tuition package, which includes all of the normal requirements from the universities: base tuition, any special or differential tuition rates, new or increased academic fees, meal plan rates, resident hall rates. Those have been presented to you in detail in writing in your board materials. We will receive an overview of those today from the universities, and those will move forward for approval in April. The second half of this are the 6-year tuition and fee growth rates that will apply over the next 5 years. In the new policy, the way that we have asked for those growth rates are related to undergraduate resident tuition, graduate resident tuition, any differential tuition rates, academic fees, meal plans, and residence halls. I will note that those are not all of the different types of tuition that you are used to seeing, but the new policy sets multiples of those tuition rates that, and I have reached my time limit. And with that, please vote. So all of the other rates that you are used to approving are multiples in policy of those core rates. So you only act upon those, but you know, for example, out-of-state tuition is then limited to 4 times the resident rate and so forth. So as I previously mentioned, you've received very detailed information from the universities about their proposals across each of these different tuition areas that you need to approve. The purpose of this presentation is to provide a brief flyover of some of those themes that you'll be talking about and thinking about as you move into the detailed presentations to ask the president, CFOs, and staff further clarifications. So by one way of summary, as we look at the 24 academic year that is being approved, there are a lot of detailed tuition and fees that have been presented. But one way of looking at that is we narrow this down to just undergraduate tuition and mandatory fees at each university's main campus to give a sense of how that tuition and mandatory fee proposal stacks up against the recent experience of tuition and fee growth for those undergraduate resident students. As you can see here, both on the resident and non-resident side, the blended rates, or the rates for each of the universities that's in that yellow bar across the top, are coming in a little bit higher than what we've seen in recent history. The averages for the universities range between the high 1s to high 2s of percentage points for resident students. We're in the 3% ballpark with the current proposal package. One thing I'll draw your attention to is that none of the universities raised tuition, and there were just modest changes to fees during the 2020-2021 and the 21-22 academic years. So there may be some reflection of that kind of pent-up demand as university activities resume. The other half of the proposal conversation from the universities is related to those multi-year rates. And I recognize this slide is very hard to see. However, you see it in your materials broken out in more detail. But by way of summary, each of the universities are asking between 3 and 3.5% for growth in their resident undergraduate tuition rates. You see those numbers between 3 and 5% for graduate tuition. But then when you move over into academic and mandatory fees, housing and dining, you see rate proposals that range from 5% as high as 10%, depending on the context. We'll talk about this more in a moment.
Brad, forgive me,
Please.
My eyes have gotten so bad. Can you please read that second yellow line that where the words are? Towards the right side. Right, down, right there.
The greater.
What is that?
It says the greater of 10% or $100.
Okay.
Let me check this out.
So
No, they both were.
Yeah,
Okay,
thank you
go
very
ahead.
much.
Thank you.
Technical adjustments, appreciate it.
So as we move through this, we'll talk about some of the pressures that help to contextualize some of these requests as you consider the reasonableness. But that is the general framing of how these are coming through. So some of those considerations that we asked the board to think about and that the board has voiced you need to think about as we evaluate the different elements of a tuition package include those mission drivers. So what are those responsibilities that we have to resident students? How are we increasing access as our missions direct us to? We talk about cost influences. This is something that's gotten a lot of attention in the press and in our conversations recently. How is inflation impacting our ability to keep up with spending, our ability to maintain quality, our ability to maintain a workforce when there's a lot of competition and rising prices? As well as new initiatives and other kinds of cost-saving mechanisms that the universities and the board are looking to pursue. We have environmental influences. How do economic trends impact enrollment? And how does that drive our assumptions about future enrollment? Similarly, how competitive are we in the external markets, especially when we compete for out-of-state students? And lastly, there's revenue influences. So how are state appropriations forecasted to behave in the near future, and how does that impact our decision making? What other sources of revenue for the universities are available? And how do the decisions around tuition particularly translate into university resources when we consider tuition discounting as part of the conversation? So looking briefly at each of those to provide a little bit of a flavor. On the revenue side, again, this is very hard to see, but I will cut it out, or I'll cut to the chase for you. Each of our 3 state universities have a variety of other smaller supporting revenue generating pathways, kind of side hustles, if you will. But really the main core of
I really like that.
the core of the university's revenue machine really comes from 3 sources. You know, there's contracts and grants, which really drives the research side. And then there's state appropriations and tuition and fees that come into the university. And that drives a lot of the teaching and learning enterprise of the universities. So as you can see, again, huge amounts come from tuition and appropriations when we're talking about the tuition side of the house. So looking at those 2 things in concert over recent history, this is the last 15 years. And what you see there is the orange bars are tuition and fees that the universities have been receiving for supporting students, while the gray bars are general fund appropriations from the state legislature. And as you can see, again, over that 15 years, the amount of money received from the legislature has decreased and the amount that we've relied on tuition and fees has increased. One of the things I'll draw your attention to, besides what we already know about the fact that we've moved some of the cost burden to students, is that the total amount of money from these 2 sources that the universities have to spend on teaching really has not changed in significant ways from 2008 until the proposed rates in 2023. We'll take that a step further. When you take into account inflation over that period of time, we actually have decreased availability of funding to use on students from these 2 core sources, which means the universities are relying more heavily on those sort of extracurricular activities in order to generate the resources that we need to keep up with inflation, to keep up with increased demands, new priorities, and so forth. So as we look at university decision-making, board decision-making around tuition, again, we can see that tuition has gone up at all 3 of our universities over the last 10 years. But if you look at the dotted line that's behind there, that is a sort of generic blending of identified peer institutions. You can see they also are going up in terms of costs. And if we don't want to focus specifically on peers, we can even look at the Higher Education Price Index, which is sort of inflation for higher ed. And you'll see that that's an even more aggressive inflator over time. So other universities are increasing like we are, but still not at the rate that costs have been increasing over that period of time. And if we break that down and just look at the general trends year to year, there's all kinds of incremental decisions, but the 2 highlighted lines here, the dark gray and the black, are both the peer average rates and the inflationary rates, both pointing upward. But if we look at the resident undergraduate spending or tuition rates at our universities, growth has actually slowed at or stayed constant-ish at all 3 of our universities. So they're increasing at lower percentage increases than we see in the broader higher education and cost market. So the last piece we'll focus on is how tuition decisions then translate into university resources. So over the last 10 years, we see tracked here gross tuition and fees collected by the 3 universities together. So that's the sticker price. That's how much we're saying that we're charging our students. The yellow line is how much we actually collect from students after discounting and scholarshiping decisions. So it's net tuition and fees. While both of those things have gone up, you'll notice that the rate in which the actual resources the universities receive from tuition is flatter than the rate of tuition increase, meaning we are discounting more of our tuition over time in order to attract and keep students on campus. Looking at that same information in a different way, on the gray bars, you see again the light gray getting larger. That's the percentage that is discounted off of total tuition, while the gray bar, the amount available for universities to spend, has decreased as a percentage of total tuition. But then you can see the year-over-year changes. While in the earlier part of the decade, we were increasing tuition at the universities and then increasing to a smaller degree, but sort of similarly, the discounting activity in order to blunt the impact of those tuition increases. You'll see for most of the decade, the institutions have been discounting at a far more aggressive rate than the rate that tuition was being raised in order to, again, blunt that blow, create more access and so forth. But part of the net result of that is less of the incremental tuition dollar is actually coming through based on this trend towards university operations.
Brian, can I ask you a quick question?
Yes,
There's
please.
obviously a shift between 22 and 23. One's an actual, one's an estimate. What what's the activity? Is that COVID funding? What is it that makes that dramatic shift in those two, between those 2 years?
That is an excellent question that we would have to follow up on.
Okay.
And that we may be able to get some insights from our
Okay.
CFOs as we go as well.
Thank you.
Can we please make a note to follow up with Chairman Simon?
Absolutely. So with that, I cede my time to the chair so that we can move in.
Thank you
if
very
any
much.
Questions.
Does anybody have any additional questions for Brad? Thank you. Before we jump in, John, I just want to take a moment and thank you and your staff for you so diligently go through all of these materials with us. We really appreciate it. And Brad, thank you for breaking down all of my 10,000 questions when we reviewed it last week. I very, very much appreciate it. Now, I know that we are changing the order and I want to ensure that Suzanne and I have the right order. So we're going to go NAU, ASU, and the U of A, or is ASU first? NAU. Okay, perfect. Thank you very much. I appreciate that. So we are now moving on to President Cruz Rivera and his CFO to provide remarks for NAU.
Thank you, Chair Pacheco, and good afternoon. And
Wait, just
hope that you can.
President Cruz Rivera, just 1 second, please. Are we good? We just need to turn up your volume.
Can you hear me now?
We can, thank you.
So good afternoon, and thank you for the opportunity to present NAU's tuition proposal for 23-24, as well as our multi-year maximum growth rates for 2024 through 2029. We are glad to have the opportunity to present to you the work that we have undergone for the last several months. Our tuition proposal positions NAU to achieve its goal of extending access to excellence. As you will hear from our CFO in a few minutes, we have worked hard to determine what are, in addition to the cost containment measures that we need to put in place, what are the new revenues that we will need in order to advance our ambitious goals. And those revenues would then be put to work from the standpoint of ensuring that we have sustainable resources to invest in our faculty and staff, to address important physical and technological infrastructure enhancements, to provide greater flexibility for students pursuing their education across our statewide footprint, and of course, the imperative of providing affordability to students, along with transparency and predictability in pricing for our students and their families moving forward. The proposal that you will evaluate today is one that we have consulted extensively on with our associated students of Northern Arizona University, our graduate student government, as well as our University Budget Advisory Board. We believe that this proposal will serve our students well in the state of Arizona. And with that, I will turn it over to Bjorn, our Senior VP for University Business Services, to review the details. Bjorn.
Thank you, President Cruz Rivera, Chair Pacheco, Regents. Let's see if we can move the slides here. There we go. Excellent. Thank you, Brad. This first slide, and we only have a couple slides just to really set context on this and really serve as an anchor for the detail that board staff has walked you through and is included in the materials before you. As President Cruz Rivera mentioned, this is really largely geared towards and very much aligned with our Elevating Excellence proposal and the need for resources, thinking about investments in people and infrastructure, both the physical infrastructure and the technology infrastructure that we need to have to support students. You can see on this slide, we've broken things out between tuition and fees, and this is regarding the proposal for the upcoming year. You can see what those percentage adjustments are. I'd just add a couple notes here that the adjustments that we propose for tuition are for for undergraduates on the Flagstaff campus would not be applicable to the current pledged students. Those pledged students from this year would be the last pledged student course going forward. So the 3%. Thanks, Tom. The 3% that you would see, or the 5% for non-resident for undergraduate students, would not be applicable for the existing students. One other thing, and I think this is really pertinent, especially to 2 slides forward when we're talking about maximum growth rates. There is the reference to WUI, Western Undergraduate Exchange students. Those rates that we set for resident students impact the non-resident rate as well. Approximately 25% of our Flagstaff undergraduate students are WUI, contribute 50% of the Flagstaff undergraduate revenue. So thinking about that revenue and the impact of what we have for a resident rate on the WUI student and the WUI revenue is very significant.
I
Just
just
one
want,
second, please.
I just want to clarify something for the board, if they don't understand, that the WUI students pay 150% of the in-state rate. So while they are out-of-state students, NAU does not get the same financial impact for those WUI students that, for instance, ASU or U of A would get. So, and NAU is the only school that all of its degrees are eligible for WUI. ASU and U of A have very limited numbers of their degree programs that are actually applicable and available for WUI students.
Thank you, Regent Manson. And I would add too that NAU is the largest WUI producer within the WICHE program. And it basically, there's only 2 schools that NAU does not double in terms of production of WUI students, so in terms of the enrollment. So that is a very significant product and pipeline for NAU. I'd add another couple of things on this slide. Statewide tuition, we are making the proposal to align the statewide tuition with the Flagstaff rate. As President Cruz Rivera mentioned in his opening remarks, that is being done so that we can have students have the flexibility to move from campus to campus, which we do see. They will have the ability within this proposal to take their financial aid packages with them. So if they have a financial aid package at the Flagstaff campus, they would be able to take that with them to the statewide campuses, something that is not in effect today. In addition, we are also implementing a temporary EDGE scholarship program to help mitigate for students the impact of that tuition rate proposal. So that is also being proposed here for statewide campuses. And it is also really purposefully done in terms of thinking about the NAU system and what that vision for the NAU system is in terms of enrollment.
Thank you. I know that we have a question from Regent Penley.
Thank you very much, Regent Pacheco. I guess I was surprised, Bjorn, at the decision here, so I appreciate your spending a little time on that. I'd like to understand it a little better because with the past history of NAU with lower cost options, both in Yavapai County and in Pima County, this would strike me as presenting barriers of access in both of those 2 counties, depending upon the amount of scholarships you plan to give. But of course, as we know, the named price does act as a huge deterrent to a lot of individuals.
Chair Pacheco, Regent Penley, that is something that we did consider. Cost of attendance is certainly lower overall at the statewide sites. Fees is a differentiator. There will continue to be differentiation in fees for those campuses. Cost of attendance in terms of housing, dining is also something that is a differentiator. Students across the NAU will continue to have access this upcoming year with Access to Excellence for those students who do need to have financial aid. Tuition will be covered for those students as well in terms of the financial need for Access to Excellence. So those students will have access to that.
Well, thank you for that, Bjorn, the explanation. It just as we move though and consider as a board how to create more low-cost options for students, this just strikes me as going against that intent on our part, although we haven't codified that. I should speak for myself, a desire to have more low-cost options in the state to really satisfy the need of lower-income families with access, especially in areas that are not on our main campuses.
And I think Regent Pacheco,
Please.
Chair Regent Penley, that is something that is really being intentional in terms of our A++ Arizona Attainment Alliance as well, the partnerships with the community colleges, so that we can consider the entire pathway and what that overall cost is for students.
Are you still in the middle of your presentation? Do you still have a couple more slides?
Just
Please, by all
I
means.
would just say that if we want to, fees on the housing and dining on this slide, this is largely related to increasing costs. In terms of inflationary costs, construction and investments are continuing to be needed to support our housing program and the housing infrastructure. And dining in terms of costs related to labor costs, especially, as well as food and material costs. That is the reason why we have a 6% increase proposed here. Both of those are being supported by the Residence Hall Association and the Campus Dining Advisory Council. Go to the next slide. And this is the last slide. This really makes the transition over to the maximum growth rates. And you can see what those maximum growth rates are. Largely in thinking about inflation, what that may be doing in terms of needing resources to cover increasing costs. I can tell you, for instance, in housing in particular, there's several projects that we are planning to have over the next several years to make investments in housing. So these are all maximums, and we just need to have that flexibility, not to say that we would use the entire maximum in any given year, but this would set that flexibility going forward. So with that, Madam Chair, I'll stop and take questions.
Thank you very much. I just want to note that I really appreciate how clearly you've laid this out. So it's very clear to tell sort of what the maximum percentage is as we're sort of evaluating and having these conversations. So thank you.
Good.
And do we have any additional questions for Bjorn? Please.
Pacheco. Bjorn, can you give me a little more information on your vision for institutional aid now that the tuition pledge is gone? Because I have tuition pledge, so every semester my tuition is covered the same amount. Does it grow with tuition increases? What's that going to look like for students?
Chair Pacheco, Regent Conyer. Excellent question. I think that is really tied into our overall vision for access to excellence and thinking about overall financial aid, thinking about making sure that we're giving students who need the financial resources, those resources, thinking about how that can work in conjunction with the board's requests for increasing funding for Arizona Promise scholarships and the potential, and emphasize potential in terms of increases within Pell Aid for this upcoming year. So all those factors do come into play for upcoming year. We are committed, through Access to Excellence to helping support those students who do have the need for it. And that's why that was really the emphasis behind that program.
Regent Herbold?
What are the main factors that you look to in order for you to balance the budget, given these numbers and the likelihood that the cost of living is going to outpace these numbers?
Yes, Chair Pacheco, Regent Herbold, absolutely. That goes to the point that Brad had alluded to as well. In terms of inflation, in terms of what those other revenue sources are, and the fact that we do have to maintain operations and look at maintaining costs. That is something that we are really focused in on, especially for this upcoming year. We are making investments in people. We've made investments in people this year. We will continue to make investments in people in terms of faculty and staff. In order to recalibrate our resources to continue that funding, we really have to look at, and we've asked all areas to really focus in on non-personnel budgets. What can we do to be really purposeful, thoughtful on how we spend our dollars and our resources outside of people. So it's a combination of growing those other types of resources that was mentioned before, whether it's grants and contracts, auxiliary revenue as well, but then maintaining a very tight discipline on costs, which is something that we really have to continue to focus on.
Do I recall correctly that you've been increasing state students faster than you've been increasing non-resident students?
Please.
Chair Pacheco, we have, over the past couple of years, we have seen a higher incoming cohort for Arizona residents. I think we are starting to see an overall enrollment growth projection for this upcoming year at this point in time, which would be coming out of the trough that we had seen in terms of overall enrollment decline. So we will see that. And I do think we are seeing some very strong growth within international, a very significant growth in our international applications for this upcoming year, which is a very good sign. So we will continue to be focused within Arizona and serving Arizona residents, but we do need to see those growth, whether it's international, WUI, or domestic non-resident.
Yeah.
And I just want to be very clear, and given your answer, you clearly answered the intent of Regent Herbal's question, but when you were talking about increasing, that's not tuition, that's number of students.
Right.
Yes.
Correct.
Exactly.
Right.
Yeah.
So,
Right.
yeah.
Every state student is punishing.
It is, I wouldn't call it punishing, but certainly it is something that, we, continue to, want to make an impact in terms of Arizona. But in order to do that, we need to have the funding, from a variety of sources, from state, investment to other funding sources to be able to serve those students.
Do we have any additional questions? Please.
Thank you, Regent Pacheco. Bjorn or President Cruz Rivera, on page 11 of 15 of our board book for item number 2, we have the broad categories in which you intend to expend this delta in revenue. I'd appreciate your speaking a bit to both the recruiting and retaining faculty. Is that an overall across the board increase? Is that a merit increase? And with regard to total strategic investments, I'm curious about what you intend by that particular category as well.
Chair Pacheco, Regent Penley, yes, the investments in people would be largely merit-based. We did a merit-based program here this upcoming this year in January of 4.5%, which impacted approximately 3,000 employees. And that was one step in a multi-year step in terms of raising all faculty and staff salaries by 10%. So we will continue to make that progress to that overall 10% goal.
So what proportion of faculty and staff received a merit increase of the total faculty and staff?
So Chair Pacheco, Regent Penley, that was a very large proportion this year. I would say it was 90+%. I don't know the exact number, but it was very large proportion. In terms of an additional merit or exemplary performance on top of that, we will have the ability for the university to consider proposals for that process.
So there was somewhat of an across-the-board impact this past year.
Chair Pacheco, Regent Penley, I would we call it more of a broader based merit. It wasn't necessarily across the board because there were certainly not everybody was included, but I would characterize it as nearly everybody.
Okay, I would just encourage you to consider using merit-based pay to a much greater extent. I recognize that when you look at the comparative salaries, NAU faculty and especially both faculty and staff have relatively low salaries compared to the marketplace. Nonetheless, I'd focus on keeping your most outstanding faculty and staff. Now, with regard to the strategic investments,
I think the strategic investments would still fall within those programmatic investments that we need to make, to support, new economy initiative type programs, continuing to support, programs to build out Arizona Attainment Alliance and the NAU system. So that's how I would characterize, strategic investments. Again, supporting people and the infrastructure more broadly to make progress toward that.
Any additional questions? Regent Duval? Good? Okay. Thank you very much, Bjorn. We, again, really appreciate how simply you've laid out the information, and so everybody can very easily understand what you're saying from an increased standpoint. We are now, again, as a reminder, changing the agenda and moving on to ASU, and President Crow and his CFO will present their position.
Thank you, Chair Pacheco. I hope everyone can hear me all right. I'm calling in from Washington, and I see that Morgan, are you at the table or coming up to the table?
Yeah.
On my way, sir.
All right, thank you. So we don't have any slides. And the reason we don't have any slides is that our proposal is the basic construct of our tuition strategy, which has been in place now for more than 10 years. And so I want to walk the regents, the new regents and older regents, not older age, but been on the board longer.
I beg your pardon.
Through our 6 points. So the number one and most important point relative to our tuition strategy is the ASU charter, which says that we will base the institution's success based on who we include versus who we exclude, and most importantly, how they succeed. Before we put the charter in place, we were not successful relative to student success. This is absolutely critical, absolutely important for people to understand. We had a 28% graduation rate, which was up from the 10% graduation rate that was in place historically. And this is not a successful institution. So you can have all the institution that you want, and if no one graduates, who cares? If no family can send their kid to the institution and be successful, who cares? So number one, ASU charter, inclusion versus exclusion, and student success. Number two, we have just successfully completed a 15-year transition from the previous model that the university operated under for decades, which is a low tuition, low financial aid model, in which we had less than 10,000 Pell eligible students. We had a very low graduation rate, to a new model, which is a modest tuition and high financial aid model, where we have 46,000 Pell eligible undergraduates, and we've increased the graduation rate for those students alone by over 2.5%. This is a transformation on a scale that's really literally fantastic. We defeated the old model, which was low tuition, low financial aid, and changed the outcome of the institution completely. We, by the way, don't believe in the concept of discount rate. We do not have a discount rate. We don't use the concept of discount rate because we actually pay for the scholarships for students to attend the university. So we're not charging them less. I just want to be clear about how we do this. We actually pay those tuition dollars from sources of revenue that we have, including other tuition dollars, but other sources also. And so that is an expense towards the mission attainment of the institution. So we do not have a discount rate, and we do not use the concept of discount rate. Number three, the third thing that we've done is a very, very significant cost containment and efficiencies that we've built into the institution and continue to build into the institution through the design of the institution, the technology that we're using within the institution. Just to remind the regents, all of the technologies that we use for our online activities weren't built for online activities. They were built for on-campus activities. They were built to help us to lower our cost, enhance our efficiencies, move the institution to scale without having to add thousands and thousands of more staff to support those students. And so we've been able to figure all those things out. And after 15 years, we've now lowered our cost into the bottom quartile of costs for all research universities. And that's a very, very important thing in me being able to present to you the model that I'm presenting. The fourth thing that we've done is we have been able to basically stay focused completely on, I guess what I would call a student body of scale. And so we have increased, for instance, the number of Pell eligible students that we graduate, not their graduation rate, but the number by 4.5%, 4.5 times, 450%, 4.5 times we've increased the number of Pell graduates that we're graduating per year. So the scale of the institution is significant. The fifth point is our 10-year plan, 10 years plus, that the Regents approved over 10 years ago, in which we said we would figure out how to operate the university, given the previous things that I just said, in which during that 10-year plus timeframe now, we would never increase in-state tuition by more than 3% or out-of-state tuition by 5%, and we didn't in any of those timeframes. And we made that proposal going forward for 10 years going forward, and we won't, because we will operate the university in a new way. Meaning then, coming to my sixth point, our proposal for 23-24 is our proposal within our constraint for a number of cost reasons, expenses, et cetera, we are asking for a 3% increase in tuition for resident students and a 5% tuition increase for non-resident students. That's at the maximum level that we've set in the past. That's the maximum level that we have going forward. I won't walk you through all of the details. Morgan and I would be happy to answer any of the questions, but then relative to our 24 through 28 proposal, it's the same. We will never increase our tuition by more than 3%, nor by more than 5%. And in fact, I will say what I've said several times, which is, and we will try to keep it as far under that as possible. And as we've indicated, by a 4.5 times increase in Pell graduates, we will continue to find ways for students coming from modest income families to be successful at the university. So 6 parts to our proposal. I will stop there and see what Morgan would like to add.
Please, sir.
Well, Madam Chair, members of the committee and board, my assessment is that's a pretty thorough presentation.
Yeah.
You also have additional information, obviously, in your materials, but I would just simply say that this is really an extension of our ongoing strategy, which we've been able to execute pretty successfully over the last decade plus. And so we're pleased actually that we're going to have a slight adjustment in terms of process that we use for pricing, but we don't think it will result in any significantly different outcomes in terms of the financial aspects of what we do.
I think I would just add one thing. I'll just add one thing, Regent Pacheco, if I might, and that is
Questions?
Regent
I think
Pacheco, I
Dr.
just
Crow
wanted to
might
add
want to
one
make
point.
one more comment.
So, Dr. Crow?
Yeah, we also have the lowest tuition, and we will continue to have the lowest tuition because our model, in the way that the 6 points that we presented, sets up a structural mechanism where our tuition increase rate is very, very modest, and so we have the lowest tuition, and we have the most diverse Pell eligible student completion rates in the country.
Thank you very much. Regent Penley.
Thank you, Regent Pacheco. President Crow or Vice President Morgan, if you could address again page 11 for me, the same question essentially, but in a couple of different categories. More than a third of your delta is devoted to enrollment growth related expenditures, 15% to the salary program. Could you speak to both of those issues both of those categories as to your plans for expenditures?
I'll give a general overview, and then Morgan, you should give the detailed overview. So our enrollment adjustments are basically the addition of small universities every year. So we're adding a small university every year in the way that we're evolving. So our expenses in dealing with enrollment growth are serious and real. And in fact, those are the first dollars off the top in anything that we're doing. We have to deal with enrollment growth. And then second, we only give merit-based salary adjustments, and our merit-based salary adjustments will average this year 5.5% to 5.9%, which is very substantial. And then Morgan can give you additional details.
Yes, so Madam Chair, Regent Penley, as Dr. Crow indicated, our model is a very much enrollment-oriented, growth-driven model, and so in order to make sure that we're providing the quality of education that we commit to for our students, the single largest portion of our investment of the incremental revenues that we anticipate for next year are committed in our planning to enrollment growth related things. So making sure we have enough faculty, ensuring that support staff that are in place for a higher number of students, that all of those things are covered. The second largest is in fact merit increases, as President Crow indicated. Our increases are entirely merit focused. Now, the large majority of our employees do tend to get increases from year to year. That's because people who are not performing the way they should be don't tend to stay here very long.
So what would you say, Morgan, is the likely mean percentage increase projected for next year? And what proportion of faculty and staff are likely to receive some piece of that?
So if this coming year, Regent Pendley is like recent years, I would say that the large majority of faculty and of staff will receive merit increases. It will be somewhat dependent, if we hit our enrollment targets and what happens with state investment. But I would anticipate that we typically have a merit pool target that we allocate, but we encourage units to reallocate as possible to supplement that. And Dr. Crow indicated we saw increases of between 5.5% and 5.9% for benefits eligible employees for our cycle that we just concluded. I would also say that one of our goals has been with faculty to make sure that we're competitive, with our peers across the country. 5 years ago, on average, we needed about a 6.7% increase to reach the peer mean. This last year, that number was down to 1.7%. So relative to our competition, we've improved by about 5%. Over the last 5 years. We'd like to keep that going. We have slightly different metrics that we follow in terms of staff, but similarly, we want to make sure that we continue to be an employer of choice there. So, down to a number, I would say that, we'll probably be in the neighborhood of 3.5 to 4, perhaps, depending on, the revenue levels that we're able to achieve.
So I'll just add to Regent Pendley's question. So the spread for the merit increases is dramatic. If you are a dean or a director or a vice president and we see salary increases that are all the same, you're not doing your job. This is something that I have been adamant about for 2 decades, that people will earn highly differential salary increases. And Regent Pendley, to your earlier comment in the NAU presentation, we also are doing 2 other things. So we've given preemptive class adjustments to certain types of faculty, particularly teaching or what we call career track faculty. We've given class adjustments to those positions to keep up with the market adjustment overall, and then merit adjustments based on performance. And then we are also doing preemptive retention. We don't wait for faculty to get an offer from somewhere else. Our faculty are being recruited like there's no tomorrow. Let me tell you, we have one of the best faculties in the country, and people are after them continuously. So we are giving preemptive raises also. And so these things all wash out into that 5.5 to 5.9% for this year. But when I took office, we were last in our conference in salaries by a long shot. And we no longer are. We are now competitive in many ways because of this merit system that we have in place.
Thank you. Are there any other questions? Morgan, I have 2 rather disparate questions. The first is pedestrian. I just want to make sure I understand, because on food and housing, you are stating that there's a 10% increase or $100, whichever is greater. Do you have an inordinate amount of sort of less than $100 costs there? Like how would you divide up if you're looking at all the costs under that bucket, how do they fall?
Yeah, so the 10% would probably be the operative number there, just given the scale of things.
So from our perspective, we should be looking at it from 10%.
Yeah, maximum.
Thank you. Yeah,
correct. And
the ceiling.
Obviously, it's largely dependent on what what the costs that we have to cover. We know that our utilities costs are going up substantially this year. Similarly, I think another major area of investment over the next few years will have to be built infrastructure. Some of our residence halls are older, and will need attention. And typically these days, residence halls are more than a place for people to live, to eat and to sleep. They're actually learning spaces, and we need to make sure that out of the classroom experience is reflecting that.
Okay, thank you. I appreciate that clarification. I just want to be really clear with the folks that are listening about what's increasing, what's not, what the percentages.
For sure.
My other question is, you have been extraordinarily innovative over the last 10, 15 years and really sort of positioning the university to take advantage of outside or non-traditional revenue streams, especially given the huge cuts you had to sort of absorb from the state. Given what happened with Silicon Valley Bank and how much you all do in that sort of startup VC space, how does that impact how you're seeing the market and the growth of those revenue sources?
Yeah, thank you, Rita Pacheco. Great and compound question. So, with a lot of the things at the university as CFO, I interest rates go up, interest rates go down, equity markets do whatever, certain businesses fail. I end up usually looking at it and say, well, on one hand, there are these good aspects. On the other hand, there are these bad aspects. And usually we own parts of both. In the case of the recent bank failures, and I think President Crow may have shared with some of you some information on this, we were monitoring that very carefully. In terms of our operating cash pool, which this time of year is probably about $1.4 billion, $1.5 billion, significant amount of resources, very, very little exposure in terms of the banks that were affected either by failing or having to have a recapitalization. A little bit greater exposure in our long-term investment pool. It's managed by the ASU Foundation, but still pretty minimal. But I think the other part of your question is how does that affect some of the things that we do in terms of knowledge enterprise, in terms of the commercialization of intellectual property? We actually had a circumstance where one of the companies in which we're a co-investor had all of its capital with Silicon Valley Bank. And that was true for a lot of the venture capital portfolio companies. That was their business niche. Now, the steps that the Fed and the government have taken to address that, I think, have at least near term sort of erased that longer term that concern in terms of the viability of those companies. Now, I think what you'll probably see is that there'll be a re-examination of some of the regulatory requirements around other than the largest money center banks. Silicon Valley Bank actually turns out was really, really big. It was 16th largest bank in the country, and yet they had looser regulatory requirements than, say, a Bank of America or a Citicorp or one of those huge global money center banks. And so I think from a public policy standpoint, that's probably going to be re-examined, and some of those requirements likely will be tightened. I hope that's
no, thank you. I just kind of wanted to get your general take, and at a different time, I'd love to talk to you a little bit about how you're assessing risk, and does that change how you assess risk, and how you're sort of evaluating the portfolio of things that you have underneath your purview.
Absolutely, happy to do that. But I mean, the immediate takeaway is you should pay attention. That there are risks, and I think we were all collectively in society reminded of that.
Yeah, absolutely. So thank you for that. Regent Herbold.
How much variability do you have in that cash pool? You said it was currently sitting at $1.4 billion.
Yes.
Over the course of the 12-month period, how much movement do you have?
Yeah, so Madam Chair, Regent Herbold, quite a lot. Typically, we monitor our cash flow actually on a daily basis. But what you see is that the biggest inflection points are when tuition and fee payments are due, for the fall semester. And then we sort of draw down till same thing happens for the spring semester. And then again, it's another draw down exercise. But typically what we're concerned about is liquidity, just like a bank. And so we manage that pretty carefully. And, currently we're comfortable, but that means that we have to not only think about, where our capital is invested, but in what. And so some is very short duration, basically money market. Others, we can extend the duration a little bit, and obviously hope over a market cycle to gain additional return. But you're taking additional risk and volatility as part of doing that. So first criterion is make sure that we have liquidity the university needs.
What percent sits over there in the foundation pool?
Of our operating cash, a very, very small proportion.
Okay.
Last time I looked, and that of course is, that is subject to not only longer duration fixed income risk, but also to some, equity return risk. And so between 200 and 250 million, the last time I looked out of the operating cash pool. And the university, by the way, has a relatively modest, our total endowment's about 1.3, 1.4 billion, depending on what's happening today. The big piece of that is actually with the ASU Foundation. It was gifted directly through them, but we do have an ASU endowment that by contract, ASU Foundation invests for us as well.
Got it. Thanks.
Thank you very much. Any additional questions? Okay, hearing none. Thank you very much. Thank you, Dr. Crow. We appreciate you jumping on. And now we are going to move to President Robbins and his CFO and hear from the U of A.
Thank you, Chair Pacheco. While Senior Vice President Rolney is making her way to the microphone, I would just thank the regents for considering our proposals for tuition increases this year. Over the past couple of years, there have been zero to minimal increases in tuition. This year, there will be some increases, as Lisa will share with you. But I would say, having the benefit of listening to both of the other presentations, one thing I would say is, based on Brad's charts that he presented, tuition and fees are still probably the most important income for the universities. When you see that we have a big, 800 million plus research enterprise, I just want to make sure that everybody understands that requires investment. That the indirect recovery that the federal government gives us on most of our research grants is not adequate to cover the cost of electricity, depreciation, all the things that indirect costs should cover. So we have to subsidize that. Moreover, I would say that as we look at our operating budget, which is about $2 billion, a large part of that is in our health sciences operation, which makes our operation somewhat more expensive to run than maybe those schools without medical enterprises. I would also like to thank Lisa because she understood that, and I think maybe last year was the first time you did this, Lisa, but you can comment on it. But starting in the spring, there will be new leaders of the undergraduate and graduate and professional school representatives, new elected officials. And Lisa and her team starts these discussions in a collaborative way very early on, because you can imagine it's part negotiation, it's part educational. And I just want to thank Patrick Robles and Luis Figueroa for their incredible dedication and work and understanding to this process, because no one ever wants to see an increase in tuition. But in order to support the mission of the university, I think it's really important that we have these discussions and educate people as to why we're asking for these raises. So Lisa, with that, I'll turn it over to you.
Thank you, President Robbins. Thank you, Chair Pacheco. And I want to add this working? Okay, thank you. I want to add a thanks to Brad and the ABOR staff, because we really have been trying to fly the plane while we're building it this year. And Brad and his staff have been great partners. And I've been coached not to be boring and not to go over the same things.
Feel free to tell a joke.
So, not by President Robbins, by my partner, Brad. And I will thank you, Brad, I really think you did a beautiful job of setting the context for all three universities. And I'm going to skip through some of my slides, because you hit on inflation and you hit on a number of things in terms of state investment that were in our packet, because it's the context for all of us. I also would really like to thank our academic affairs provost folks, Casey Urquidez, and our chief budget officer, Garth Perry, who's on the back row, who are partners throughout this process. And it's nearly a year of effort. This is a very unusual year trying to do two proposals at once. All right, you know that we have a strategic plan and that it's working, and it is we're benefiting from awards and accolades. I won't go through through all of these. I do want to take a moment.
I just want to take a moment.
Sure.
It's just another proof point that our universities are performing really well, you know, particularly in comparison to their peers.
Incredibly well, Chair Pacheco. Thank you. And I think that we would be remiss if we didn't stop and acknowledge that we had the highest retention rate ever for the University of Arizona this year. So just want to make that point here. Regent Penley, you were asking other institutions about our investments, and you pointed out enrollment growth expenses. That is something that we continually, you can see from this chart, that we must continue as our enrollment grows, we must continue to invest in. So this is straight from our financial statements. We're pulling out instruction, academic support, student services, and you can see the total enrollment line. So as our enrollment increases, so does the demand for our services from our students. So direct correlation there. We expect to make another increase in investment this year. I think it was Regent Herbold who pointed out that our state residents, we must make a large investment to continue to educate our state residents. So this chart is pointing out that we're not receiving the amount of revenue that it costs to educate a state resident. So we must have non-resident tuitions and other revenue streams in order to cover the cost of our in-state students. And then as my colleagues have shared, we also have made and will continue to make investments in our greatest asset, our human capital. So what we're trying to show here on this chart is that we have made continual investments in compensation increases. You can see our headcount, and this breakdown here, it's probably too hard to see, but the colors are showing compensation changes for administrators, faculty, postdocs. Thank you, Stefan. That just got bigger. That was helpful, thank you. And staff. And there was a question about what the average increases have been. In this last year, the average increase for faculty was 5.8% at the University of Arizona, and staff was 7.7%. That's recognizing that minimum wage is increasing and that we have a pay structure that looks at the market for staff, and we continually make adjustments to that as we see the need to with competition in the market. We're all facing increased competition in the labor market. And we have a salary increase program that will be implemented July 1st. That's a 4% pool. All units are requested to set aside 4% of their personnel expenditures to have that salary increase program, but that is basically the floor. That's the mandate. You can see that we end up going well above that with our average increases. Okay, Brad talked about this. We greatly need state investment, and we continue to work with our government community relations team to help the legislature and the governor understand the investment that's necessary to continue to drive our mission forward. This just shows that we've been forced, because of the lack of investment, to flip our revenue model. Brad hit that well, so I'll skip on. And we have been talking about inflation. We're going through our budget process right now at the University of Arizona. We meet with every single unit on campus, and I keep talking about creating a word cloud. Inflation is going to be the largest, the largest word in that cloud. Our strategy is to try to keep our close to our peers. This is showing where we are with our peers in terms of undergraduate resident tuition. I just want to remind you that our starting rate is a bit higher than our peers because of our tuition guarantee. So we have to recognize that we're holding that tuition rate steady for 4 years. So it's not exactly an apples to apples comparison here, because some of these units, most of these organizations don't have that guarantee, which we see as a competitive advantage for the University of Arizona. And then here you can see with graduate resident tuition, we're very close to the peer median. So getting to our proposal for this year, similarly to ASU and NAU, we are really trying to balance the financial burden on our students and their families with recognition that costs are escalating. Trying not to be boring, but we are all in the same context here. So just a reminder with our guarantee that 99% of our undergraduate students will not see an increase. So our plan for fiscal year 24 for the incoming class will be a 3% increase for residents, 4% for non-residents. We believe that the non-resident market can bear that 4% increase, and that's based on research and focus groups with parents and families. For graduates, same increase for residents. And then if we looked at our position with our peers in terms of non-resident market for graduate students, we're actually above the peer median. We're not where we'd like to be, so we're continuing to hold that rate steady. For colleges of medicine, our tuition is actually we have the opposite. We've been below our peers, and we want to keep up with the market. So if you look at our resident tuition compared to other states' colleges of medicine for their resident tuition, we're well below. So that's why there's a 4.7% increase for resident students and 1.25% for non-residents. Our medical schools follow this very closely, and there's information in your packets about that. College of Veterinary Medicine is very grateful for the state support that was given this last year. That's allowed us to hold tuition steady, and we will continue to watch that competitive market as well.
I think you actually bring up a very good point. So if the state made a larger investment in the system, these numbers would be closer to zero across the board.
Yes, thank you, Chair Pacheco. We do not have any increase in mandatory fees this year. We actually placed a moratorium on fee increases for fiscal year 24. That is to recognize that we're in this transition phase where we are moving to the college fee model. So you'll see in our proposal that we'll submit in the fall that we will move to the college fee model. And we didn't want to make that more difficult by having increases in fees this year. We do have or proposing a small increase for both undergrad and graduate housing rates. That's 3.5% for undergraduate housing and 3% for graduate housing. That's fiscal year 24. And then if we look ahead, these rates look pretty similar to both NAU and ASU, 3% for resident undergraduate tuition, 5% for fees. I don't have to read all these to you. I'll say that the rationale for fees being higher than tuition is that we feel that these the costs that are components of fees are more volatile to market changes. Think about, as we roll into that college fee model, course fees are subject to materials and supply costs. Same with meal plans. We have increasing costs of labor and costs of food, and resident hall plans the market has moved 11% in the last 7 years. We never expect to be at that position, but we also need to be responsive to what's happening in the market. So I'll stop there and ask if there are questions.
Do we have any questions of Lisa?
Thanks.
Thank you. I want to go back to the conversation about the guaranteed tuition program.
Mm-hmm.
And I just want to clarify, you said that 99% of your undergraduates will not see an increase in tuition. So that leads me to believe 99% of your undergraduates are in the tuition guarantee program.
Yes, that's correct.
That is significant, and that is a major revenue impact. Do you provide that guarantee program to both resident and non-resident students?
Yes, we do.
Whoa.
Okay. Do you plan to continue that program in exactly the same way it is currently structured?
Thank you, Regent Manson, Chair Pacheco. We do plan to make one change. Right now, the plan is both for tuition and mandatory fees. As we transition to that fee model, we have to unlock those two. So we plan to keep the guarantee for tuition. And again, we really see this as a competitive advantage. Many of the students who are applying to the University of Arizona are also applying to Texas A&M, to UC Boulder, and these schools have implemented guarantee programs. Oregon has implemented a guarantee program. So we feel that it's important for us. We hear from our student leaders and from families that this is one of the reasons why they're choosing the University of Arizona.
So I I'm not certain that all of those schools actually provide that guaranteed program to out-of-state students.
I'm not certain either, but I bet. that-
I would check. I think that that is a revenue source. I mean, when you're at an out-of-state student, you have a little bit less price-sensitive market, and because they can afford to go wherever they want to go, essentially. And I'm just hesitant to give those kinds of guarantees to a student that is making a choice to come here. You all have a high quality, high retention program. I'd ask that you guys review the parameters of that guarantee program.
Dr. Robbins?
Yes. Again, every year I've been here, and Regent Penley is early on pushed me on this. We debate this vigorously. There is exchange of ideas about this, and we realize that there's an opportunity there for revenue, but at the same time, realize that we have a competitive advantage, and we've weighed and balanced it, and we will obviously go back and take your guidance and continue to debate this, but I don't know if Casey's
She is behind you.
Yeah.
Mhm.
I don't want to put you on the spot, Casey, but Casey is part of this debate with us, and she's our expert on this, and she knows what's out there in the market. And we go to high schools, and she talks to counselors, and so.
Well, I mean, certainly nobody's going to say, oh, you shouldn't do it. I mean, anybody who's out there and is looking to come to an out-of-state school is going to, hallelujah, this is a great idea.
Yeah.
But at the same time, I have a sneaking suspicion there's money being left on the table.
Oh, we fully acknowledge that there is.
How much money do you leave on the table?
I can't calculate that fast, but the one thing that we do know is that, I was also told, Regent Penley, when I got here, there is no way that you can increase out-of-state tuition. And I go, as long as they're coming and willing to pay, I think we can. And I was told the elasticity, the rubber band's about to pop at any minute, but we think that we're making it up with this increase in tuition.
And I know that Regent Penley has something to say, sir?
Yeah, I was, I'll admit I was wrong on price elasticity of demand for non-resident students. So I'll admit that I misassessed.
Well, I don't think that you ever said that to me.
Well,
I think it was our former CFO who kept telling
Well-
me, you can't do that.
Well, I was also concerned that you had reached a point. So I'll admit that I had some of that concern about the price elasticity of demand. I completely agree with the kind of questioning that you've heard from Regent Manson. I really think that you ought to look carefully at what schools like Oregon and Washington and others in your peer group are doing with out-of-state students. My recall of University of Colorado Boulder, and I haven't been there in a while.
I had two there. I did not get a guarantee.
That was
They do
my
offer it now.
recall.
They should have come to the U of A.
To Regent Herbold's point, I suspect you're leaving tens, perhaps hundreds of millions of dollars on the table here. And for a major research university like the University of Arizona, I really urge you to look very closely at this issue. And as you pointed out, this has been an issue for me from the time you arrived, believing that for a university of your type, your class, your goals, this is probably a mistake in my view. Okay?
Thank you.
So, yes, but on to other issues. You have a great story in almost 80% of the delta in revenue going to support faculty salaries and benefits. It is a wonderful story for the faculty at the University of Arizona. I would hope you all tell that story as clearly and as many times as you need to let faculty know what this administration, your administration, President Robbins, is doing and committing these resources to them, because it's a great, great story. And you see it in the numbers. I'll go back to my page 11
Yes.
of 15. It tells that story clearly. Now, with regard to the transition to the college fee model. As you know, and this goes back to my days as a young assistant professor in Texas, when I realized that Texas charged in tuition a few $100s and thousands in fees. And I listened to my students as my first year assistant professor explain how Texas worked on that. I thought, well, this is insane. Fees are a tuition under another name. This is the price of attendance. And the price of attendance isn't $500. It's $3,000 or $4,000 or whatever it was in those days. So I'm very pleased that as a board, we have agreed to transition to a point that there's greater transparency in pricing. And with my economics background, I like transparency in pricing. My question is, when do the differential fees end? And when are you fully at the University of Arizona on this broad college level fee along with tuition so that the pricing transparency is much improved? When?
Thank you, Regent Pendley, Chair Pacheco. Great question. Our proposal that will come forward for fiscal year 25 will have the implementation of the college fee model. We have a guarantee that's connected for the students who will be admitted in this coming fall of 23, so fiscal year 24, who will have to move through the model because we made this guarantee to those students. So we're working with Casey and her team to work that out, but it'll be 4 more years where we have kind of a hybrid, where all of our incoming students will move to the model with, everyone will move to college fees, but we'll still have some legacy fees that we have to teach out, essentially.
So the legacy fees will only be the teach out, Lisa.
Basically, the 4 years of guarantee, the 8 semesters of guarantee for the students who enter this coming fall.
Okay.
Thank you very much, Regent Penley. Regent Herbal?
Could you generate for us offline an estimate of what that cost is to the
Yes.
to the guarantee and break it into resident and non-resident?
Absolutely.
That'd be very useful to understand what the bill is.
Yeah.
No, that'll be
Is it
helpful.
tens of
And as-
millions or hundreds?
Right. Or 3, right? I don't know, it's not probably that low, but you just never know. It's good for us not to guess. And I just say, Regent Penley, though I'm not an economist, I am a paying parent. And so transparency is great. Do we have any additional questions of Lisa?
May I ask Casey to give us it's like calling in a rules official. I think my ball's in a divot here.
Casey, by all means, she's ready to go.
Made by a burrowing animal or something. Casey, the one question I wanted to ask you is, when you're out there in the battlefield competing, which of our biggest competitors do have guaranteed tuition?
Well, for out-of-state students, our biggest competitors are CU Boulder and University of Oregon, and they both have the guarantee program, and they both do extend that for non-residents and residents. So those are our 2 biggest outside of ASU, of course, who also is a major competitor of ours outside of the state of Arizona. So those were some of the things that we looked at, as well as some of those that are now rising and really competing with us, which are Ohio State and North Carolina Chapel Hill, and they both continue to offer the guarantee to non-residents and residents. So that was part of our decision making as we were looking at all of the data that was coming in through iPads and then comparing that with where we were at and our clearinghouse data to make sure that we could understand where our students were coming from and really offer that competitive opportunity.
Thank you.
So my follow-up question to that is, what's your yield rate versus those other schools?
I don't have that with me right now, but I can definitely tell you that in a day or
offline,
a couple hours.
Yeah, offline, that just as it'd be interesting.
Sure, yeah,
Yes,
we
Dr.
can definitely
Robbins.
let you know that.
As I was listening, I was thinking about this as Casey was talking, and I think everybody here would acknowledge behind the vigorous exchange of ideas we have internally. I have been a big proponent of getting rid of this program, but I've always deferred to the experts and said, okay, we're going to go with it. I'll defend it, all this stuff. I would point out that ASU has never had this, and they seem to be doing just fine, but.
NAU is facing each other.
Yep.
Yeah. So no, thank you, and we'll continue the conversation. But is everybody? Does anybody have any additional questions of Lisa? Regent? No? Good? Okay. And before we close out this session, this section of the agenda, first and foremost, thank you to all of the diligence that each of the three universities demonstrated in gathering all of this information, presenting it, going back and forth with us. We very much appreciate that. And, as a reminder, the tuition conversation is always hard. None of us want to raise tuition, least of all the three presidents and their senior teams. And so as we're sort of doing this evaluation and ensuring that we can continue to offer an excellent education in Arizona and still be competitive in a global market now, there are lots of different variables and elements that come into play with these increases. So again, thank you. And we'll continue to have this conversation and ensure that we offer the absolute best education for the lowest price. So really appreciate all your diligence. And Dr. Crow, thank you for being with us remotely. We are now, a tuition hearing will be held next week on Tuesday afternoon to allow the public to comment on these proposals. We look forward to receiving those comments, very much so. In addition, Regents have been receiving email comments submitted through a dedicated email address and comments submitted through the Regents website. This is an information item only, so there is no action taken today. And these proposals will be voted on at the board meeting in April, which is April 19th through 21st. We are now moving on to items 3 and 5. We will discuss each university's annual sunset fee review. This is the third year that the committee has discussed this item pursuant to the board's policy that requires the board to review each academic fee at least once every 10 years. We will start off with ASU, and I believe Provost Gonzalez will be presenting for us. Or somebody else in her stead? Morgan?
Something to be on fire on, sir.
Yeah.
So I can make this pretty short, Madam Chair.
Please.
If you'd like.
You know how I love expediency.
We had 2 fees to review, 2.
Mhm.
We reviewed them. We'd like to keep them.
Okay. Are they serving Arizona well?
Yes, but in all seriousness, as a result of transitioning to the college fee concept that we did a number of years ago, and you heard my colleague from University of Arizona talking about how they're in process of doing the same thing, the large majority of our fees have gone away.
Okay.
And so there really are only these 2. The material, they're described in the materials. They both have to do with various aspects of our aviation programs. The model in aviation education across the country is that there are additional fees because of the expenses that are involved, whether in some cases here it's due to simulators. We have aircraft simulators on our Polytechnic campus next to the Phoenix Mesa Gateway Airport, or it's actual flight instruction where people are learning how to fly a plane. Mm-hmm. There are a lot of additional expenses there that are typically handled with a fee. So that's the report. If there are any questions, I'd be happy to address.
Thank you very much. We appreciate you stepping in.
Yeah, thank you.
And this was, again, informational only, so there's no action required. This proposal, along with the following 2 agenda items, will be voted on in April. Item number 4 is NAU's annual sunset fee review. Bjorn?
Chair Pacheco, members of the committee, this will be brief. With our transition to the college fee model, we did not have any fees to review this year because in the previous years, we had reviewed all of our fees. They had been totaled approximately 1,200, and we reviewed approximately 500 and 400, if I remember the numbers correctly. Coming into this year, we did not have any then to review, and in conjunction with the transition to the college fee model, there would not be any reviews. So with that, Madam Chair, I will stop for any questions.
Thank you. Any questions? Thank you very much. And this is, again, for information only and will be voted on at the April board meeting. Item number 5 is the U of A annual sunset fee review. Yes, sir.
May I sneak in a answer to a question on a previous item? It'll be quick.
I'm going to ask you that you restate the question, please.
How much?
What was the question?
Oh, do you want me to ask the question?
Please, and
What
then
the
you can
yield
answer it.
rates are for Oregon, Colorado, and U of A?
Yes.
I may answer
yes.
that? For University of Colorado Boulder, 15.9% yield, and so we're all talking about the same thing. If you're accepted, do you attend? 15.9%. For Oregon, 21.8%, and for the University of Arizona, 20.1%.
Thank you. Appreciate it. Lisa?
I will confess that I'm.
Yes, ma'am.
Thank you. I will confess that I was so distracted by the issues this morning that I'm not 100% on top of the fee issue, but I'm going to pull it back from the meetings from the back of my brain. We also have provided information about our review of fees. The total number of fees that the university reviewed in 2022 was that were unchanged is 19. We had one fee eliminated for a total of 22 that were reviewed in their entirety. The total fee revenue across that portfolio in FY22 was $5.8 million. So de minimis changes overall.
Thank you. And again, this is not for voting on today. It's going to be voted on at the April board meeting.
Right.
Are there any questions? Hearing none, thank you very much.
Thank you.
And now item 6, board staff will present a comparator on the university system in Colorado. As a reminder, this is part of the analysis that we're engaging in as a board on different and potentially competitive systems and how they are funded, so we can better understand funding sources and how different universities use those resources to provide their state-sponsored universities with revenue.
Thank you, Regent Pacheco. Good afternoon again, Regents. So as Regent Pacheco mentioned, we have moved our gaze from the state of Florida to the state of Colorado in terms of looking at other institutions that are cited as performing well and have differing features than the state of Arizona does. In selecting Colorado, one of the reasons we didn't go with some of the higher ranking states from this US News survey that we talked about before is that Colorado provided a different mix of potentially positive features we want to look at. So there's several states that are ranked well because of low tuition and fees and low debt. And we kind of talked about some of those themes with Florida. So we thought Colorado as a more middle of the pack financial model, but that had higher statewide educational attainment might be a good contrast to talk through. At the time, didn't recognize the risk associated with presenting something that two of our regions have a particular skill set in.
And especially those two.
So please pray for me. But that said, so we'll walk through some of the comparisons. As it relates to Colorado, they have 2 universities in the US News Top 100. They do have a lower cost of attendance than Arizona has still. They have implemented some fairly robust performance funding models. They have a university stipend program that we're going to be talking about. And as I mentioned before, the state has a very high and often cited level of adult educational attainment. So we'll draw through some of the similar comparisons that we talked about last time to start trying to highlight trends and see what is interesting. So the state of Colorado is actually smaller than the state of Arizona with 5.8 million residents to ours 7.2, but their GDP is higher than ours. So as it is a kind of pound for pound comparison, while Arizona and Florida were kind of competitive despite being very different in size, Colorado is a much stronger state economically than Arizona is at present. Similarly themed, the state budget of the state of Colorado is much larger than ours is with all of that economic power. And as a result, the state budget spending per capita is much lower in Arizona than it is in the state of Colorado. So Colorado's legislature has more money to work with when talking about priorities and general direction. So if we look at the university system in Colorado, one of the things that I'll start off with is it is it is broad, it's very differentiated, but it is also way more decentralized than the other examples that we've looked at so far. So by way of orientation, there are 4 R1 high research universities, R1, R2, and several other more focused institutions around the state, many in rural settings. But one of the things worth noting as we look at their structure is that most of those universities are individual institutions that have their own leadership, their own direction, their own rules. There are only two university systems formally in the state, and that's the University of Colorado system and the Colorado State University system. So each of those are run separately in Colorado state statute. Each one of those institutions and the two systems have their own mission, their own sort of parameters, their own geographic areas that they are responsible for within the state, and a good deal of independence. So the Board of Regents at the University of Colorado is a publicly elected body. The Board of Governors at Colorado State, as well as the university boards of trustees at the other universities, are all appointed by the governor, and each university has a different formula for which members are picked for those boards. But each of those boards has the operational, fiduciary, legal responsibility for running their institutions. The statewide entity for coordination of higher education in Colorado is the Colorado Commission on Higher Education, which is again appointed by the governor, but it is essentially the board of the Colorado Department of Higher Education. So the commission selects an executive director of the board, or of the commission, who is also the director of the Department of Higher Education in the state. And the Commission for Higher Education is really sort of an entity that works closely with and as an agent of the Colorado General Assembly, so the legislature of the state of Colorado. So many of the commission's responsibilities are sort of broad strategic strokes, coordinating activities. There are some policies around academic planning and transfer processes, really about trying to create harmony within the higher education system. And the commission functions as the capital planning and project approval authority, as again, an agent of the legislature, because Colorado law requires that to be approved by the legislature. So taking from this structure, which is a bit different than ours, again, it's more separated. There's more distinction between the institutions. Let's take a look at some of the characteristics of the institutions themselves so that you can get a sense. So we'll look at selectivity again. So this is the percentage of students who apply and are admitted to the universities. And as you would expect, there's a spectrum from those kind of smaller rural institutions have fairly high admissions percentages. There are a few schools within the state that are more selective. One of those is the Colorado School of Mines, which is, for those who are not familiar, a roughly 5,000 student, very high regarded, top 100 universities in America engineering school that is part of the state system. And then we have the University of Colorado's Denver and Medical Campus, Colorado Mesa University, and UC Boulder, which is their largest Research One institution. But generally speaking, if we're comparing against Arizona institutions, all of the other schools tend to be less selective. The kind of the top tier of the Colorado system are similarly or more selective. Again, highlighting, if we look at our peers from a Carnegie classification perspective, we have ASU and U of A showing up as generally less selective with all of those except for Colorado State. And NAU is far more selective than UC Colorado Springs, though I will note that University of Colorado Springs is a lot smaller than NAU is. Again, about 5,000 students, but similar in scope. So then moving to the outcomes conversation, again, you have a mixed bag where some of the smaller and more rural institutions have lower retention rates than you would see in our institutions. The kind of marquee programs within the state have comparable or higher retention rates than Arizona's universities do. Again, calling out the comparisons. So then if we look at the connection between outcomes and graduations, you would see the same thing that you would expect to see, which is that as the selectivity, this is graduation rates again. So again, the kind of top tier research universities do have higher graduation rates than the Arizona schools show, but then generally Arizona is outpacing those smaller schools and with more rural admissions. So if we look at selectivity and outcomes, you do see the same connection again, that the more selective the institution is, the higher the outcomes tend to be. But not in the same kind of stark comparison that we saw with some of the Florida schools that were aggressively pursuing selectivity as an institutional strategy. So moving from sort of similar-ish institutional profiles, at least among the big universities, we move to comparisons of enrollment and degree production. So Colorado and Arizona have sort of similar production of undergraduate enrollment when you look at the per capita impact. One of the things that's interesting, though, is that Colorado, being a somewhat fiscally conservative state, is actually very transparent in a lot of their data. So we were able to compare their resident enrollment as well to that of Arizona. So one of the things that we'll note as an interesting distinguishing feature is that Colorado seems to very aggressively pursue policies of in-state enrollment first, where they have rules about having to accept as many Colorado residents as possible and maintaining fairly aggressive class makeups. So all of the universities, with some exceptions here and there, are required to have 55% of their incoming class or more be Colorado residents, and they need to maintain a 2/3 Colorado resident student body over time. Again, there's some exceptions to that, but that's generally what they're supposed to be pursuing. And as a result of that, you can see that while we're sort of similar in terms of undergraduate enrollment production, Colorado is to a greater degree educating Colorado resident students, more so than Arizona is with Arizona resident students. Looking at bachelor's degree production, again, you get very similar numbers, but as you can see, Arizona's machine has been buzzing along at a much faster growth pace than Colorado's has over the course of the last 5 years. So as we talk about similar institutions with kind of similar outcomes, one of those things is, well, so what else is different about Colorado? And we talked about how the state has a lot of money. So one of those other features that makes a lot of sense and that you see observed in sort of Colorado discussions is what they call the Colorado paradox, where there's a lot of high income people in Colorado. There's a lot of very educated people in Colorado, yet they cite that a lot of that comes through in-migration of skilled workers and knowledge workers from other states. So one of those things worth highlighting is that the state of Colorado, and this is just one index that the Milken Institute puts out, it cites one of the highest concentrations of federal research, engineering, R&D infrastructure in the country. You can see that for the last several years, according to this index, Colorado has been in the top 4 states in the nation for the intensity of some of this sort of research knowledge enterprise type activity. The way this was built out, they look at the amount of money spent on essentially education versus R&D, risk capital, technology workforce, and so forth. You see that they have high rankings for technology and science workforce in the state, but again, are keeping up pretty well by prioritizing education. So another piece that you'll see cited is that while Colorado's high school graduation rates are in the bottom half of the nation, they are still better than Arizona's current high school graduation rates. But one piece of a really strong distinction is that Colorado's K-12 system, as measured by the NAEP scores, Colorado is in the top 5 or 6 in both reading and math, especially at the 4th grade level. So the elementary school infrastructure in Colorado seems extremely strong. And even though that doesn't always translate into the high school graduation rate, it does appear to provide a strong baseline of some of the raw materials that are going into Colorado's resident-focused university work. So back to that idea of resident enrollment, you can see by institution, the number of first-time undergraduates and all students. And as you can see with the exception of somebody, that, you know, the majority of basically all of these classes in the Colorado universities are Colorado residents. So that's where they're driving a lot of that. Again, we see some of that in Arizona as well, but not to the same degree that those institutions are. Now, one of the reasons that this is important is when we break down where the revenue comes from for the universities. So looking at Arizona, again, we've already talked about this a lot today, where we have tuition and fees being a significant piece and state investment being a smaller piece on top of that. When we look at Colorado, they break revenue up in more defined ways, which I'm going to kind of zip over to real quick. So Colorado has what they're calling a performance funding allocation model that breaks revenue into a couple of different bands. So the first thing that they do is that they do not fund universities based on enrollment. They fund students, like they call it a stipend system, but it's essentially a voucher system, where they set money aside at the state level for students to use at state universities. So in the current year, any Colorado resident that goes to a state public university gets the first $104 per credit hour paid for by the state of Colorado. And if they choose to go to a private school that's participating in Colorado, it's half of that amount, so $52 a credit hour. So as such, they're not paying for that enrollment demand at the universities. They're letting the students choose where the funding goes by their enrollment patterns within state. So the second layer on top of that is that the state then provides sort of baseline funding for the university based on a couple of different driving factors. So they have formulas that drive this, but ultimately they're looking at mission differentiation and they're looking at the need of the students that are enrolled. So you'll find that students that are focused more on rural and less affluent populations will get bigger levels of state funding in order to incentivize that work and to help compensate for the cost of educating students who have higher needs. Similarly, for those that are pursuing things that are of interest to the state and programs that are important to Colorado's workforce, there's additional funding that the legislature makes available to make that happen. And then the last piece is the outcome and performance structure, which is where they then look at the outcomes of the universities and they provide some level of formula funding based on the student's ability or the institution's ability to retain students, get them to complete and transfer, and to meet other performance goals of the universities. The reason I break that down is, again, you can see the different colors here in the institutional funding sources. And if we break that down to 100% of institutional funding, you'll start to see the difference. So Colorado, like Arizona, their institutions are heavily funded by gross tuition and fee or net tuition and fees. But then you have a fairly small band of general fund funding from the legislature. Some institutions like Metropolitan State University of Denver that are more access oriented have a bigger portion of state funding to provide that basic funding, while others have, UC Boulder has a sliver that you can't see as far as generic state funding goes. Then on top of that, we have fee for service per student revenue. So that's the blue band. Those are contracts and agreements that the state has made with the universities to offer certain types of programs in certain places. So rather than providing generic funding for programs of interest to the state, they instead do it through a contractual mechanism where they say, we would like to have more veterinarians in the southwest corner of the state of Colorado. Therefore, we're going to partner with Colorado State University to offer something there, and we're going to fund it at X level. And then the last piece is that College Opportunity Fund stipend program that I talked about. So that is officially tuition and fees, but it's separate because it's not borne by the student. It's actually borne by the state of Colorado on behalf of the student.
And you know what revenue funds that bucket?
It's general appropriations as well. So we talked a little bit about where the institutions get their money. So then the question is, how do the institutions spend their money and how does that compare to us? As you can see here, it gets a little bit hard to compare because UC Denver is also blended with its medical campus. So that is obviously a high cost offering. You see similarly that University of Arizona is our high cost offering because of the blending that's involved there. So, but the bottom line is their smaller, more access oriented institutions are working on sort of similar, if not, kind of similar funding to what we are per student, while their top tier research universities that are often cited, their top 100 schools are funded fairly handsomely compared to ours. So then we look at competitiveness of tuition and fees for non-resident undergraduates. What you can see here is that, again, they take advantage in Colorado of those out-of-state residents by charging fees that kind of represent the caliber of the institution. So UC Boulder charges a premium, Colorado School of Mines charges a premium compared to what we do. But we seem fairly competitive in many of the other spaces. Again, our larger universities are charging more than their smaller access universities. But when we look at resident undergraduates, that's when you start to see some of that differentiation happen again, where the School of Mines is the one outlier as an expensive school for everybody. But even looking at UC Boulder, their in-state cost is similar to our in-state costs, and all of their other options are lower. But on top of that, you see the light green portion of that tuition and fee. That again is that College Opportunity Fund stipend. So if we're looking at what the students are actually paying to go to school in Colorado as a resident student, those dark green bars are what we're comparing to the orange. And as you can see, it's pretty low in comparison. One of the sort of interesting features of that, as we talk about financial aid, so how are we making it more affordable for students? Back to that College Opportunity Fund. So that's money that's set aside in the general fund, general appropriations of the legislature each year based on enrollment and interest and whatnot. That money, or in some of their budget reports, that pool has gotten as high as almost $1 billion available, but it's a couple $100 million a year in expenditures. But part of that program, they actually require the State Department of Higher Education to start and fund messaging at the 8th grade level, to get 8th graders to understand the idea that the state of Colorado is setting aside money and investing in their future education. So it's very focused not on just providing the money to create access, but on sending the message that Colorado is trying to keep and to grow and develop those young adults in the state. Continuing from there, there's the Colorado Opportunity Scholarship Initiative, which is a need-based statewide scholarship, sort of AZ Promise-ish in terms of qualifications and availability. As we've heard several times today, there are some tuition guarantees. So CU Boulder has a tuition guarantee program, as does Colorado State's Global Campus, so their online and distance program. One interesting feature is there's a program they call the Path Forward, which, similar to that voucher concept, allows low-income students in public schools in Colorado who graduate from high school early to take their per-student funding with them to the university to pay for the cost of attendance. So I thought that one was a little unique. And then the last batch here are a series of targeted programs, usually in the form of stipends or loan forgiveness, on spaces where the state has deemed a particular statewide need. So we have early childhood education has access programs, and then a series of rural educator programs where they're either trying to get rural educators to have continued education to have more credentials, or they're trying to incentivize education students to go into practice and provide service in rural communities. With that, I set aside the comparison and I'm open to any questions.
Are there any questions? Regent Penley? Regent
My
Goodyear?
only question would be to Brad, what inferences would you draw beyond what you've already stated for us?
Regent Penley, I just gave you all my inferences.
I heard some of them, yes, but I'm
Yeah.
curious if there were any others in terms of advice to the board.
I think the biggest takeaway, and you heard me focus on it a bit, Regent Penley, is that there are some things in there that we can't control. Like you can't control it as a board. It's hard for any of us to control, like the health of the state's economy. So I think there is a bottom line in terms of, economic success for Arizona will beget success in other areas. Extending beyond that, I think a lot of the interesting things were some of the creative approaches to the different funding models that were used and how some of those approaches might appeal differently than simply flat requests for funding that have not been successful thus far in legislative circles. So maybe there's something there as it relates to some of the individualist kind of approaches to education funding that might be useful.
The Path Forward was interesting. I'd not heard of a program like that. Have you, Regent Duvall?
No.
Okay.
But may I
Please,
go ahead?
by all means.
Thank you. This is only 2 states, although we've seen in other settings similar data around Georgia and other states, but particularly those 3. Promise programs work. That's the takeaway, I think. And because the governor has made a budget request, it's a first step, not a sufficient step, but a first step, we have, I think, sort of pulled the gas off a little bit, sort of allowing that to play out. It might be the right thing to do. I do just want to point out that this has been something this board has been talking about. It's been something that the presidents have said is a major priority. We now have a governor who thinks that that is the right place to put her fungible higher education investment dollars. But to John and to the GAG team and others, I don't sense that we have a coherent strategy as to how it is that we take this epiphany, this reality, and this competitive wake-up call, and seize the moment, be it legislature, be it ballot, be it whatever it is. And so, I come back to that. I'm probably, overbeating the horse, but look, I just think it's another takeaway. We just keep seeing this, that when a student in 7th or 8th grade hears, if they come to school and perform, there's a pathway to higher education, it gets into the culture of expectations, and they have a lower cost of attendance and they have better outcomes. And I just think we got to keep this top of mind. It keeps slipping from us, and we're going to regret missing the moment if we don't keep going. So, Madam Chair, thank you
very much. Are there other comments or questions?
The only thing, Regent Pacheco, I would just offer, having lived in Colorado for a while and dealt with the Colorado Commission on Higher Education, which is their coordinating board, as Brad pointed out, that board, because of every university having its own separate board, faced what I thought were severe limitations on its capacity to really direct overall statewide higher education policy. In contrast, although at times we may wish that we had boards that focused individually on our universities, the very capacity that we have on one hand to focus on one of the universities and where it's headed and what we have as hopes for its performance, its quality, et cetera. We also have the capacity to really focus on broad state goals, like we've done with the Promise Scholarship, with the New Economy Initiative, that I think would be very tough for Colorado to do in the very same way. We've accomplished some things that I think Colorado could not.
I agree.
All right, great. Other comments? Regent Herbold?
Nope.
That's unusual.
I want to point out one thing that's slightly different, and it's not, Colorado has several more significant population centers than we do. And while they do have a rather large rural portion of the state, a large portion of that population is met by a school called Colorado Mountain College, which is kind of a community college-esque type of organization. But that whole Greeley, Colorado Springs, Boulder, Denver, Fort Collins run up the Front Range is a lot of people. And so it creates an ability to have institutions in each of those locations that are big enough to survive. What's interesting is that University of Colorado Boulder, which is their largest and flagship school, is the size of NAU.
Regent Penley.
One other comment when comparing Colorado, and I must say that I missed this when I returned to Arizona, and that is something that Regent Manson just mentioned. Except for a couple of isolated community colleges, it is one community college system. So for instance, when we worked to create Colorado State University Global, I created a very tight agreement with the community colleges, and I could do so essentially with every community college in the state by working with the head of the community college system. When we focused on really good transfer relationships, and frankly, we're for the most part better in Arizona than Colorado was by a long shot, but nonetheless, you could work with one set of individuals for all of the community colleges. The diversity that we have may be an advantage, but it also represents considerable difficulty in really close collaboration on some really big statewide issues that could be achievable in Colorado, which are much harder in the state of Arizona.
Well, the inference of, you were just mentioning how they have the opposite with their university system. right?
Exactly.
And as we do. No, that's a very interesting point. So if there are no more comments or questions, we will move on to our next item. And again, I want to thank Brad and his team for doing all of the diligence and research. Thank you very much. It makes us better at sort of navigating the things that we need to think about. So appreciate it. We are now on to item 6. Board staff will present a comparator date. No, I'm sorry, we're done with item 6. We're now on to item 7. It's not Groundhog's Day, which is a review of each university's share of their assets and liabilities under the Public Safety Personnel Retirement System. That is going to present for us today, and she is with ABOR. And obviously the university CFOs are here to answer any questions.
Thank you, Madam Chair. So 5 years ago, statute was changed to require each governing board to look at each assets and liabilities of the PSPRS system. Subsequent to that, the board adopted the same requirement in our policies. And last year, legislation was passed that substantially reduced each university's unfunded liabilities. And the purpose of this review is to look at those unfunded liabilities, which the universities each have a plan to pay off with their operating revenues. So today, the committee is being asked to review and formally accept those share of assets and liabilities from those PSPRS plans. Thank you.
Are there any questions or comments? All of these sort of backup information in your materials? Okay, hearing none, I'd like to make a motion. I move that the committee forward to the full board for consideration and acceptance each university's share of the liabilities and assets under the Public Service Safety Personnel Retirement System based on the Public Safety Personnel Retirement Systems June 30th, 2022 actuarial valuation reports for each university as described in the executive summary. Is there a second?
Second.
All in favor?
Aye.
Aye. Any opposed?
Aye.
Motion passes. Thanks, Greg. Yeah, exactly. And we are now moving on to item 8. And it is the first reading of the coaching policy. For item 8, the board asks the committee to review for consideration on the first reading the proposed revisions to ABOR policy 6-1001 concerning head coaches and athletic director contracts. Jenny.
Thank you, Chair Pacheco. Chair Pacheco, members of the committee, as you've stated, the board office has asked the committee to review this and forward to the full board for first reading this particular policy. Under current ABOR policies, the board is required to approve multiple year contracts for intercollegiate athletic directors and head coaches for football, baseball, and basketball. We have revised these policies with the purpose of clarifying the notification requirements from the universities at various points during the hiring process. So these policies clarify primarily when the universities are required to notify the chair and the executive director prior to initiating a hiring process, during the hiring process, prior to extending a contract offer, prior to offering an extension or amendment, and prior to termination. I'm happy to answer any questions you may have.
Committee members, questions? Nope. Regent Penley.
Just a comment, Regent Pacheco. Thank you, Jenny, for this revision. I think it's a very good revision. I also very much appreciate what President Robbins has done in the past in hiring his coaches. He has told us what he intends to do, the kind of coach he's going after, the general salary, and what we've seen is, I think, pretty consistent outcomes with what you had prognosticated. So
as I told you before, I'm in severe March sadness.
So I just want to thank President Robbins for what he's done. I think this policy really encourages us to do exactly what President Robbins has done in the past. And I'm appreciative of the policy and obviously of what President Robbins has done in the past in keeping the board informed in a very appropriate way.
Thank you, Regent Penley. Are there any other comments, questions? Regent Mata, you good?
No, I'm fine. He said what I wanted to say.
Yeah. Okay. Not hearing any additional questions, I will move that the committee forward to the full board for first reading the proposed revisions to ABOR policy 6-1001 multiple year appointments of head coaches and of intercollegiate athletic directors, as described in the executive summary. Is there a second? Regent Penley.
Second.
All in favor?
Aye.
Opposed? Motion passes. And Suzanne, I do want it noted that Regent Goodyear did come, so he doesn't get, thank you. Okay, now we are going to conclude. Yes, exactly. Yes. Yes, sir. Please, floor is yours.
Thank you. Just before we wind up the Finance Committee today, I want to take a moment and recognize Sue Sosa, who is, this is her last committee with us. She will be retiring at the end of next month after almost 25 years with the Board of Regents, at least the last 10 of which she's been the assistant for this committee. I don't know if it goes back. It goes back probably much longer than that. And so I just wanted to take a second. She was my assistant when I came over to the board. And so she broke me in and taught me everything that I needed to know about working for the Board of Regents. She's done a fantastic job for us for the last 2.5 decades. And really sad to see her go, but very happy for her as she moves into the next very exciting stage of her life. The first step of which will be to deep clean her house.
It's been enjoying a pleasure working for the Board of Regents all these years. There's some sad, some joy of going, but it's time for me.
Well, thank you, Sue.
In a clean house, in a very decluttered home.
Thank you very much for your service.
Thank you.
That's awesome.
Yes. I was just going to mention we're concluding this meeting a few minutes early. So what we'd like to do is move up the agenda for our next meetings a little bit, if that's okay with everybody, if we take about a 15-minute break.
So we'll start the special board.
So let me just conclude the meeting and then we'll turn it to, yes.
Oh, sorry.
Now we are officially concluding the Finance, Capital Resources and Committee meeting. Thank you all for participating. The chair is now Regent Manson's. Jenny, note that.
So we'll take a short break. We'll start the executive conference room again for the executive session at 2:45. Okay? Yep.